Israel just launched its second wave of airstrikes against Iran, and fear is everywhere. Perhaps you've seen it in the news. Markets are panicking right now. The S&P 500 is down nearly 2%. Bitcoin has dropped to around $103,000, and oil prices surged by 14% overnight. However, history rhymes, remember? And history has historically shown us that geopolitical fear, like what we're seeing right now in the headlines, has been the market's greatest discount code. Today, I'm going to show you exactly how this has played out during past war crises and how this current panic might just be our next big crypto opportunity. So stay tuned. Happy Friday, by the way. And let's start by taking a look at the current war impact and investor psychology. Let's break this down simply. So why would a geopolitical tense environment like the one unfolding right now between Israel and Iran, why would it impact financial markets? It comes down to uncertainty. Investors hate uncertainty, and conflict spikes fear, causing them to pull money out of the stock market, obviously, to save it for a rainy day. And it also makes them end up pulling the money out of definitely risky assets like crypto. So right now, we're seeing significant declines in the market. I was saying a moment ago, we see the S&P futures drop nearly 2% after strikes on Iran's capital, which is so sad. And Bitcoin slid dramatically to $103,000. And crypto liquidations across the board have surpassed $1 billion, mostly from long positions getting wiped out. And we know a long position is simply when someone puts in a bet and they believe the market is going to continue to go up. So they bet on that. And then if the market goes up, this depending on what they're betting on, Bitcoin or another crypto asset, then they'll make money as it goes up. So all of those people got liquidated. Oil also spiked 14%, driving further uncertainty. Yet, despite this turmoil, experienced market analysts like Jason Pizzino reminds us that historically, these types of scenarios have often ended up what he calls brief disruptions, and what traders sometimes have called a nothing burger. Anyway, the point is that time after time, markets quickly bounce back in scenarios like this of war and uncertainty. So this begs the question, should you or I really be panicking? Or could this be an opportunity? To understand this better, let's dive deeper into some major historical examples. Back in January of 2020, during heightened US-Iran tensions, Bitcoin slipped sharply by 9%. But incredibly, it fully recovered just 5 days later, gaining 12% in 1 month. And when Russia invaded Ukraine in February of 2022, Bitcoin initially plunged 11%, only to skyrocket back up to 39% within the following month. Even during the intense Israel-Hamas conflict in October of 2023, Bitcoin dipped around 6%, but rebounded swiftly, soaring back up 40% within a month, and eventually achieved a staggering 170% gain over 5 months. And most recently, in May, just a month ago or so, amidst the whole India-Pakistan nuclear tension situation, Bitcoin briefly dropped by 3%, but surged back to record highs within just 2 weeks. So what's clear from these historical patterns is that initial panic rarely lasts, and the returns that follow these events can be impressive and rewarding and happen quickly. Now let's take a look behind the scenes into what I call institutional bullishness, because right now, despite recent market volatility, institutional investors or professional investors are showing incredible bullishness and bullish behavior. Just recently, for example, Bitcoin accumulation wallets, addresses known for long-term holding, they added another $3.3 billion worth of Bitcoin, taking their total holdings to nearly 3 million Bitcoin. Corporate heavyweights are also entering the game aggressively. Japanese firms like Gumi and Anap Holdings recently bought large amounts of Bitcoin too, signaling renewed institutional interest. Even BlackRock, a giant managing trillions of dollars, confirms that Bitcoin remains a dominant topic among their investors, with Ethereum quickly catching up. We even see Mike Novogratz, the CEO of Galaxy Digital, who first invested and seeded Ethereum, has even boldly suggested Bitcoin could hit $1 million if adoption rates persist. We also see the whole regulatory scene and the regulatory sentiment shifting positively lately, as we covered this week as well. I'd encourage you to go watch my past videos if you haven't from this week, because it'll definitely give you a glimpse of what's going on, and all of this news is pretty much still relevant. And it's not just Bitcoin that's benefiting from institutional bullishness. Stablecoins and altcoins are also showing promising signs. The stablecoin market is projected to surpass a massive $2 trillion valuation by 2028. Corporate giants like Jack Ma, the infamous, one of the world's largest investors, backed Ant Group, entering the stablecoin markets in Singapore and Hong Kong. So this is another huge vote of confidence from one of the biggest investors in the world. So just this year, we're seeing the market cap for stablecoins risen by 17%, reaching a robust $228 billion. Meanwhile, altcoins have recently hit a new 4-year low, making them attractive entry points for investors aiming to dollar cost average into long-term positions. Ethereum in particular is receiving renewed attention. BlackRock's recent injection of $160 million into Ethereum's ETFs is a clear indication that institutional money believes Ethereum may very well lead the next major crypto bull run, which is basically upon us now. We have all the signals pointing at this. We simply need to see the pressure build up. That said, how should we strategically navigate this volatile market? If you've watched my past videos, you already know what DCAing means, dollar cost averaging. It's a strategy, and it's so powerful, especially during uncertain times in a market like we're seeing right now. But if you're new here or missed my video, I believe it was yesterday or the day before, where I go into explaining what dollar cost averaging is, we'll go through a very quick 1-minute recap. So if you already know what this means, then just hang tight. But it basically means investing a certain amount regularly, regardless of price swings. So instead of stressing over perfect timing, you spread out your investment to smooth your average purchase price over time. Given the current lows in altcoins, now might be the perfect time to implement or stick to your dollar cost average strategy. And finally, always plan your exits carefully. Once you see substantial gains, typically between 25 to 50%, locking in some profits, taking some profits to secure your wins, and definitely paying yourself back first. That's always a rule in investing that I follow, is a smart idea. Unless, of course, your personal financial goal is simply to stock up your retirement fund. If you've already paid yourself back, that's rule number 1. And you don't necessarily need additional capital to invest in other crypto tokens this bull run, then simply hold on to your Bitcoin holdings and don't take any profits. It really is just a personal decision that depends on your personal risk profile and what your goals are. So as we close out today's video, remember this powerful lesson. Geopolitical panic and fear in light of war has consistently provided investors with brief yet incredible opportunities to buy discounted assets. Think of it as Bitcoin and top blue chip crypto tokens being on sale right now. That's how you need to view the current market conditions, and not be scared, because historically, initial market reactions like we're seeing right now just last a few days, while gains over the next month can be substantial, but only if you're brave enough to buy when everyone else is selling. Because if you haven't heard the famous saying, it says, be fearful when everyone else is greedy. So when everyone else is all excited, hey, it's a bull run, that's when you need to be fearful or cautious. Okay, and not be overspending, not be over-investing. And when everyone else is scared, you should be greedy with your investments. Meaning when you see fear in the headlines like this is your signal. This is our signal that it's a good time to buy good investments. Buy Bitcoin, buy Ethereum, buy Solana. Though it's not financial advice, but you know why I'm telling you this if you've been watching my channel. So that is a wrap for today's video, nice and short. And if you found value in what I shared with you today, definitely like the video, definitely share it with a friend or family member that needs to understand this, okay? Needs to understand where we are in the market, what they should be considering to invest in or do. Even though I'm not a financial coach, I do live and breathe this stuff every single day. So that's why I'm sharing what I know with you and what I know top investors know and are doing right now. That's what I'm sharing with you, the secret sauce. So anyway, guys, I love you. That's a wrap for this week as well. I'll be back on Monday to cover what's happened over the weekend. And we'll also continue to unpack the top crypto tokens, ecosystems, chains, and why I'm looking at them and why I'm sharing them with you. Because I don't just bring you anything on my channel. I only bring you the best tokens, the best alpha that I will have zero regrets in the future sharing with you, because you may get other, investment hot alpha from other channels right now, but not everyone is committed to bringing you value only and being here in several years and being able to hold their head up high. So many KOLs and investors, and I don't mean to speak bad against people, but it's just a fact, okay? And anyone who's been in crypto for some time knows this. I'm just here to tell you what it is. So many crypto influencers and KOLs, quote unquote, are only looking to pump and dump on you. I really hate to say it, but it's the truth, okay? They'll share a hot, flashy token with you and then hope that everyone will pile in, and then they're just gonna pull their money out, okay? So you need to be so careful about that. And I'm not perfect, but I do know what's going on in this crypto market. I do know the way this works. And that's why I'm here to tell you about it and to protect you. That's my goal, is make sure that you only invest in the best top tokens. So maybe, and I've heard some of your comments, that maybe some of the tokens I'm sharing with you are not going to pump so much, okay? Or you're not going to get so rich on them in the short term. In the long term, the tokens I'm sharing with you are like the future Facebooks and Google and Amazon of the world. Those are the tokens I'm bringing you. So anyway, guys, enough of that. I love you. Take care. Go outside. Make sure you have fun this weekend. It's so important for your mind, and just stay healthy. So see you guys on Monday. Ciao.